Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, including news that wholesale money market moves higher are starting to push into fixed mortgage rate offers. But first, there was an interesting announcement from Nestlé over the weekend. It said it is moving to control more of its supply chain by less through traders and middlemen. The reason is that consumers are expecting them to take responsibility for all aspects of their products, including the social aspects, and it can't do that fully when it buys supplies from traders. Driving this is the power of social media. One of the consequences will be the domination of the full supply chains by these huge brand owners, and it is a trend our food companies will need to look out for. Things could change quite quickly, freezing out smaller intermediate suppliers. It is probably an unintended consequence of social media pressure, but that is the force behind this major policy shift. US Treasury 10-year bond yields ended the week at 2.61%. Gold rose in New York on Friday too and will start the week at $1,315 an ounce. Equity markets are now eyeing a Standard & Poor's 500 at a magical 2,000 level. The oil price rose in the US but fell in the Brent benchmark as Libya announced a return to major oil supplies. Oil prices have been remarkably stable for a long time now, but the Iraqi situation still has the potential to change that. Still, Russia's shift east is satisfying China at present and taking some pressure off the world price, and Europe has been forced to be open to alternatives. Fear of oil seems to have been greatly dissipated as our energy intensity falls. We have updated our inflation-adjusted New Zealand dollar crude oil price tracking chart, and that shows a steady trend lower in costs since early 2011. Locally, we get the May migration data out today along with credit card data for the same month. We're also seeing today the announcement by ASB of some sharp rises in fixed mortgage rates, pushed up by those rising wholesale money costs. We start the week with the New Zealand dollar still very high as there was little change over the weekend. We're at 86.9 US cents, 92.8 Aussie cents, and the TWI is at 81. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.